Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. What we're going to do is dive into earnings. On a Friday, we've got 3 earnings coming out. Citigroup later, which in itself will be fascinating. It was a reverse 10-for-1 stock split 15 years ago, and they're still trying to figure out to move forward. Wells Fargo with a very different platform, always challenged. Damien's chomping at the bit to ask Alison Williams about that. But I'm going to start with Fortress Diamond. It just keeps continuing, Alison. You have lived this. Harrison was running JP Morgan, and this young Turk, Jamie Dimon at Bank One in the Midwest, was going to come in and save the day. Save the day. He's built a juggernaut. Let's start with the JP Morgan distinction. Why are they different this Friday morning?
I think they just continue to reap the benefit of their investments. I think that one of the things that JP Morgan has done is, being willing to spend the money. Keep in mind a couple of years ago, they said, look, we need to invest. We're investing in technology. People were very upset about the operating costs, but they're proving they're proving that those investments are yielding results.
Right. They're trading at a 12-13 multiple. They're up 16% per year for the last 10 years. Nobody's even close. And I got a headline, JP Morgan notches profit on Visa gain. Is that the Sassammer House north of New York City? Killing it for Jamie?
This is how they're paying for all the great things that Damien was just referencing. So they had an $8 billion gain related to tendering some Visa shares. They announced this actually even prior to their investor day. So I think for the most part, investors saw this coming, but sometimes you don't know who's watching the stock and if they're seeing this extra $1 billion in expenses related to that gain, and if there could be some negative reaction to that. But we think it's smart. So they have this big $8 billion gain. They're going to pull forward some of their charitable contributions by funding those contributions with shares. So we know that that's a great tax advantage. But that is upping their costs for the year by $1 billion. So we think that that's a smart move. I think on the more negative side, Wells Fargo guiding up on their costs, which investors are not going to be happy about. These operating losses, or non-operating losses as they refer to them, the customer remediation costs that relate to the ongoing issues, the asset cap that have been going on since about 2016.
Right. I mean, look, Amy, net interest margin, OPEX, credit quality, who cares? All we care about are banking revenues and trading results. Talk to us about FICC trading, equity trading. I mean, it's been a pretty good quarter, no? I mean, what's going on at JP Morgan? My man, Matty Kolakowski, we're in securitized sales over there, said he had a big quarter. Is he getting paid?
Well, it is a good quarter. I mean, I think there's one of the things that investors are really keying on is the investment banking revenue. And perhaps that's just because it relates to all of our businesses, because the revenue itself, just investment banking, isn't a huge lever for JP Morgan, but it does help trading, which is a bigger lever. And we saw better than expected results, $2.5 billion on the investment banking revenue side, and that helped FICC trading better than expected, equities trading better than expected. Really, we're seeing the lift from those strong equity markets, as well as credit trading on the FICC side.
Alison, I'm just kidding, right? I mean, it does matter, but it matters more for Wells Fargo when we're looking at OPEX and we're looking at fundamentals. So talk to us a little bit about why that's different there. I mean, this is something that's been going on since 2016, no?
It's been forever.
It's been forever. I mean, when we think back and they first announced these issues, and for those not familiar, there was a fake account scandal. We've seen complete turnover of management. We've seen a couple of CEOs, the board's turnover, just years and years of trying to get it right. This has never happened to a bank. This sort of the regulatory backlash, and so no one knows when it's going to end. It just keeps getting longer and longer, and we just keep seeing these costs, and so we should be getting to the tail end of those, but the fact that, there's two things. So the costs are going to be more than expected. The net interest income, they've been guiding down 7 to 9%, and now they're saying that it's going to be on the higher end of that range. Some of the banks that have more trading and have talked about, like, there's an impact there, it kind of goes out in the wash with fees. But we're going to want to hear more detail from Wells. Why are they a little bit more negative?
What you brought notes into that? Damien, it's a Friday.
Come on.
We do Bloomberg surveillance.
Bank earnings with Alison Williams. Come on. I'm prepared. But Alison, look, for me, I'm a fixed income guy, and for me, it's about credit quality. And I'm curious, what are your takeaways here? Are they provisioning more? We're at the tail. One would think we're in the 11th inning of this cycle here in the U.S. Does anything stand out to you in terms of credit quality on that end of the equation?
So far, we haven't dug fully into it, but it looks like what we had expected, which is we're seeing provisions for the credit card business. And a lot of that just relates to growth. Charge-offs look like they were those are kind of today's costs. They're as expected. But as those portfolios grow, you have to reserve for the life of the loan, and cards have the highest loss rate of all the categories, as you know.
I want to go bigger, broader here. Both of you got a lot of experience on this, and of course the carnage of the great financial crisis, and that day where Jamie Dimon bought the Bear Stearns building for $10 or $1 or whatever it was.
City paid him.
Alison Williams, J.P. Morgan has global aspirations. Are the government's Alison Williams going to let J.P. Morgan expand and be America's bank abroad?
I think the key thing from a regulatory standpoint really relates to the capital standards. And, this is something that all the U.S. banks have been complaining a little bit about because they look tougher than the implementation of some other regions. So after the crisis, Basel came out with some guidelines. All the different jurisdictions have implemented them in their own way. And the U.S. rules are pretty tough. We call it gold plating in terms of setting those standards.
In 5 years, do you see J.P. Morgan dominant in Europe?
They're pretty strong there now.
Exactly.
They're pretty strong there now. So I think that the most interesting thing for JP Morgan on the international front, people don't talk a lot about, but they're looking to expand their retail presence. They're looking to expand their retail presence in the UK.
The digital retail experiment in the United Kingdom worked.
Yes. Well, they haven't talked about it a lot, but from what we hear, it's been meeting their metrics.
Alison, thank you so much. We can't wait for you to publish at Bloomberg Intelligence. If you're in the money business, there is exactly one Whitney. He is Whitney Tilson, and to put things in perspective, we'll sit over a beverage of our choice and go, gee, someday I think I'll climb Kilimanjaro.
Oh, right.
He's actually climbed Kilimanjaro. The academics are bulletproof. He's a Baker Scholar, which it's like playing for Billy Cleary at Harvard hockey. It's like a Baker Scholar.
He's the world's toughest mutter 50 and older, too.
And he's been on fire. The author of Poor Charlie's Almanac, The Wit and Wisdom of Charles T. Munger. Whitney Tilson has been on fire about his Democratic Party. Let me make clear, he is a supporter of Democratic politics. Whitney, thank you so much for joining. You've been a voice of sanity for Republicans and Democrats out on Twitter. How'd the president do last night?
Well, let me give you a football analogy. If I told you that, hey, your favorite quarterback of your favorite team just completed a 10-yard pass, you'd say, great, moves the chains, one step closer to victory. But what if I told you that you're down by 14 with 2 minutes to play at the 50-yard line and your quarterback has an obviously sprained ankle, if not a broken leg? Then you'd say, oh my God, that's terrible news that we completed a 10-yard pass because it's a hopeless situation. Our only chance of victory is a couple Hail Mary passes. So completing a 10-yard pass actually reduces our chances of victory. So I hope that's not too complex of an analogy, but Biden was solid last night, couple little gaffes, but the problem is it did nothing to dispel the concerns of 80% of American people that he's too old for the job, and basically the belief of now every single Democrat in Congress that he needs to step aside to give us any chance of beating Trump in November.
Whitney, I observed firsthand the Kennedy clan at a Democratic convention at Boston Garden look across at a senator from Illinois, a kid from Chicago, take the trophy. This is when Obama rose to national presidents versus an elderly, aging Ted Kennedy as well. That dialogue, that tension, Whitney Tilson, of the Democratic convention, as in Chicago soon, seems to have evaporated into an elite, almost tribal class. Now, you're on the edges of that. You're a donor, et cetera. But does your party, and frankly the Republicans, do they need to get back to an older, more fractious convention process?
Well, look, I'm actually looking forward to when Biden steps aside, and at this point, it's a question not of if but when. I think it's now 95% likely that he will step aside. And then I think it would be a disastrous decision to simply anoint Kamala Harris. I'm all in for supporting her if she earns it and can demonstrate that she's got the ideas, vision, can capture the imagination of the American people, and one, beat Donald Trump, and two, be a great president. But there are also at least a dozen, if not 20 other people whose names are being tossed around. And I think there should be an incredibly exciting free-for-all. Yes, chaotic, but it would rivet the attention of the nation, energize the Democratic Party. And then in the next 5 weeks going into the convention, hopefully we've narrowed that down. And what we're looking for, to your point there, is someone who catches lightning in a bottle the way Obama did. And can ride, becomes the clear front runner, can ride that to not just, I don't want to just beat Donald Trump. I want to beat him like a rented mule and throw him on the dustbin of history where he belongs. So that's what I'm looking for. Now, maybe we don't get that. But right now, I think Biden's got a 15% chance of beating Trump. If you just told me, hey, we can find somebody who makes it a jump ball, it's 50-50. That's a massive improvement from sticking with the, I want to switch horses if I can shift the odds that much, but maybe we can get it up to 80 or 90% and really beat Trump.
Well, Whitney Tilson, what you're suggesting here is that the Democratic Party will not go to its backup quarterback. I mean, that's interesting. So then what do they do? Do they go to the free agency?
Yes.
I mean, do they go to Pritzker? I mean, Newsom? Who do you suggest here? Who's the favorite?
Honestly, I don't know. And I probably know half of the 20 candidates who might throw their hats in the ring personally, but all 20 are incredible. The Democrats have an incredible bench. So to use a football analogy again, we've got a chance to hit the reset button. And instead of being down by 14 with 2 minutes to play, we can start the game all over again. So right there, that's great news. Secondly, our quarterback with a broken leg is out. So we got to find a new quarterback. Right. Now, we've got a long-time backup, but a lot of questions about whether that backup is the best quarterback. So we've got 5 weeks to have a training camp, and we put the word out. Anyone who thinks they can be quarterback of our team, come to our training camp, and we're going to show us what you got. And if Kamala Harris can, emerges from that process as the one most likely to beat Trump and most likely to beat the great president, then I'm all in. Right. But she or whoever earns that job, they have to earn it.
Whitney, I got to be quick here. It's a huge news day. I got to get to Michael Barr. You and Michael Porter were definitive in studying how to jumpstart inner cities. The Democrats are losing Black and Hispanic youth to Republicans. How does President Biden or whoever runs, how do they get back at the margin Black and Hispanic youth?
Yeah, no, it's a good question. At the end of the day, I think young and especially young minority voters are inclined to vote on the Democratic ticket, but they share the same concerns that 80% of Americans share. That, a year ago, the majority of voters said, we don't like either of these guys. The message to both parties was, give us somebody fresh and new and exciting. We don't like either of these guys. And now only one party has the opportunity to deliver to give the American people what they've asked for. So I think if we do that, a wide swath of voters, not just young and minority voters, are going to vote Democrat and carry us to victory in November.
Whitney Tilson, thank you so much for joining us today. Clearly a Democratic donor and supporter, of course, legendary within hedge fund work and also his academics out of Harvard University. Right now on the equity markets in America, thrilled to bring Cam Dawson, NewEdge Wealth. She'll be spending both Saturday and Sunday at Brooklyn Crab, having the crab cakes out in Brooklyn. Cam Dawson, yesterday was odd. Let's not go over the details. Small caps win. Mag 7 hammered. Was it nothing more than a constructive adjustment on the way higher?
Well, we do know that positioning got incredibly skewed, where hedge funds were very positioned into large caps in tech and growth and very underweight and short in small caps. So part of this is just a positioning snap and then a chase of that short covering. The question is, can it continue? And that really depends on the path of yields. It's good to remember that small caps rallied 20% in November and December last year because the 10-year yield fell 100 basis points. If yields can continue to fall, small caps likely can continue to rally, but maybe it only lasts a month or two because there's still profitability issues, balance sheet issues. Yeah. So a lot remains to be seen.
Cam, that's great, but the reality is a month or two is long-term for Damien Sassower.
Well, Cam, talk to me a little bit about, what we just kind of take away from this latest CPI print. I mean, are we really thinking the Fed's going to move here in September? And if it does, what's the dollar going to do off the back of that?
Well, now we got this PPI print this morning that came in hotter than expected. So now there's a big question mark about where PCE comes in, which is the Fed's preferred inflation metric. So we think that the odds of a September hike certainly went up after yesterday's data. But if we have a couple more data points that look like that PPI, maybe we do get pushed out to November. So this is still a very data dependent Fed, and we could see this kind of saw pattern within inflation data, which could keep us kind of in an uncertain place.
Well, Cam, what I'm really asking is September, December, it doesn't matter. When the Fed does eventually cut, what do you think the dollar will do? Will it finally start to depreciate relative to G10 and EM?
It certainly seems so. And we saw that in some of the price action yesterday. Of course, the dollar dropped a lot and we saw a perking up of EM stocks. And it's still very much in a downtrend if we look at EM versus S&P 500. But there is some movement and action there. So if there is follow through and the Fed is cutting more and being more dovish than other central banks, then yeah, it could set up for a weaker dollar. The question is, though, if other central banks are having to cut further, then the dollar may still be the best game in town.
Cam, yesterday we had some diminished organic revenue growth. Right? I mean, Dawson's house, it's just loaded with Frito-Lay and Doritos. She's like the queen
She's
of
so healthy. I don't believe
triple
you.
spicy
No way,
Doritos.
no additives.
We had, Cam, yesterday some organic revenue growth shortfalls outside of the Mag 7. Does a pro like you extrapolate that revenue shortfall over to those 7 wonder stocks, or is it discrete and separate?
I think this is so important and maybe the most important trend or theme going into 2025 is that we're seeing pricing power fade. And it's really interesting because as long as CPI remains weak, this is effectively the market or the economy saying that companies cannot pass through price increases to their end consumer. Look at the chart of shipping costs and durable goods prices. In 2020 and 2021, they went right up together, meaning that as shipping costs went up, durable goods prices went up because it got passed through to the end customer. Now shipping costs are soaring, but durable goods prices aren't moving higher. This means that companies are having to absorb them in their margins, which means that there is very much risk to the margin forecast in 2025 EPS estimates.
Well, I'm so happy you brought up affordability, and we know that home affordability here in the U.S. is really, really poor right now. But I mean, if you just look at some of the other like autos, for example, I mean, or travel for that matter. I mean, Cam, talk to us about, just generally speaking, after you back out all of those fixed costs, all of the discretionary, what's left for the consumer? Do they have any spending power left?
We're certainly seeing or hearing anecdotes of them getting pinched. Look at Delta's earnings from earlier this week saying that they're seeing fading pricing power. I was at JFK yesterday. It certainly seemed no evidence of a waning in demand, but certainly there is signs that consumers are getting pinched. We continue to hear this wonderful word choicefulness out of the likes of people like Walmart.
Me. Come on, stop. Was choicefulness in Graham, Dodd, and Cottle when you read it, Cam?
Certainly not. But again, this is a reflection of consumers hitting a wall as far as how much more price increases that they can take, which means that companies are taking it on the chin in margins.
Right. Cam, it's Friday. I got to quote Doug Cass in a moment. Help me here. What's your new adjustment off Yardeni's 5,800 on SPX? Can I get a 6,000 out of you this morning?
The one thing I'd note is that if we trade to 5,800 by the end of the year, and assuming that the market is right for their $277 a share for 2025 earnings estimates, you would be trading at a higher PE multiple on the year ahead forward than you were at the peak in 2021.
Cam,
so never say never, but that's pretty high.
Got to go. Cam Dawson, thank you so much. NewEdge Wealth. We'll talk to her at 5,800 as well. This is a joy and always an honor. Joining us, iconic at Goldman Sachs for years, is Robert Hormats. He has a book I'm going to mention here in a moment, but his work has been profound on America's relationships, particularly across the broader Middle East and to China, where he'll be traveling to soon. Ambassador Hormats joins us. I'm doing everything I can, Bob, not to say, what do you think about Biden? We don't have time to waste on that. I got to go back to your book. It is the best book on the domestic and fiscal responsibility of this nation as we project a foreign policy. The only one that can tie your shoelaces is Richard Haass, who reformulated the Council on Foreign Relations. With this debt and deficit, how do we prosecute a foreign policy?
It's going to be more and more difficult. I think you've put your finger on something. It's the elephant in the room that no one wants to talk about, and that is the inexorable increase in debt and deficits is going to mean that, first of all, future generations are going to inherit a huge debt and a huge interest burden, but also the competition for money within the U.S. government is going to intensify. And if you need more money for defense and national security, you're competing with a variety of other parts of the government who want money for their elements of their policy, like social issues. And we're going to have a social problem if we cut those programs, and we're going to have more and more security risks if we don't fund security. And our allies see this, and they see us as less reliable as an ally and less reliable fiscally. Right.
Bob, this is important. When you and Secretary Clinton, and whatever you are, folks, Republican or Democrat, Clinton and Hormat said it's about economics, it's about our relationships across the world. You're going to need someone encyclopedic on Asian derivatives, swap rates, and how they fold into the governments of Asia.
Yes.
So the new undersecretary for you is Undersecretary Damien Sensauer.
Bob, but I really want to know, you were just in China, and we know that sentiment in China is weak. You know, just how weak is it? Unemployment, youth unemployment, the property sector. You know, what was your take, boots on the ground?
Well, boots on the ground, the average Chinese, I think, is suffering from a series of uncertainties that need to be cleared up. And they're having, as you know, this so-called third plenum. They have it every 5 years, and that sets policy for the next 5 years. The whole Central Committee of the Communist Party meets, Xi Jinping gives a big speech, and that essentially is the policy for the next 5 years. They have to improve consumer confidence. They have to deal with the very difficult real estate problem they have with huge amounts of debt, state and local debt, foreign investment, which they need in order to create jobs, is leaving the country at a fairly rapid rate.
That's right.
The private sector is feeling a lot of uncertainty, which is the most productive part of the economy, is feeling a lot of uncertainty because they're not quite sure what role the government wants to play. Does it play a more involved role in the economy, or does it give more latitude to the private sector? And private companies, American companies and foreign companies, want to know what the rules of the game are not just today or tomorrow, but over the next several years, because some of them are, as I say, are leaving. Some would be interested in coming, but they want to make sure that the rules are such that they can survive and that they're not interfered with, and particularly in the technology area where China really wants to excel. But you need not just Chinese companies, which are quite good at doing research, but you need to collaborate to a degree with foreign companies. And we and they are both pulling apart on technology, not coming together.
Well, I agree with you on the level of uncertainty in China about foreign policy, about domestic policy. But here's my question for you. If there's one certainty in China, and you began this conversation by talking about debt levels and how high they've gotten, they're through the roof in China. So, isn't President Xi trying to do the right thing? And why aren't markets rewarding him for his efforts to try and bring down debt levels in China?
That is one of the interesting things that doesn't get very much publicity. He is not a big spender. I knew him when he was head of Zhejiang province, party secretary, and he took a very conservative view of spending. And what they're doing, and they used to, for a while, to get growth going, spend money like crazy for every kind of
big bang stimulus, the whole thing.
And roads, bridges, etc. They're not doing that now. What they're doing now is keeping a relatively conservative budget, but spending it on a number of things which increase what he calls the dynamic productive forces of the economy, which is technology. So they're spending money, but they're much more focused. It's much more on technology, both for economic reasons and because advanced technologies like quantum and AI are good for the military too, and they want to build their military capabilities.
We have a 3-hour conversation now. I'd just like to talk to you about the new Modi and the future of India, but we can't do that. You're going to put me in the Hormat's timeout chair, but I got to go here. It's a public service, and that's what we do at Bloomberg Surveillance. You've done it for multiple party people. You're maybe associated as a Democrat, but you've done a lot of Republican service as well. You've been around the block. I know you're 79 and holding, but you're not. You're the same year as the president. Your thoughts on your colleague Joe Biden in politics, when you, at 81, see Joe Biden, how do you interpret that different from Damian Sassower and Tom Keene and all of our listeners and viewers?
Well, I'm pretty well staying away from the domestic politics at this stage in my career.
Tell us about the medical side, Bob. You're in great shape.
I'd make a broader point, which gets to just what you're saying, that age really is not the central issue. The issue for people, and I'm in my 80s, is how much energy you have and how you project yourself and how well your mind works and your body works. So I would say that all this emphasis on how old he is not really the issue. And people have to judge for themselves the other elements of age. But I don't really want to get into a domestic political debate on Biden. If I were a doctor, I would give you my prognosis, but I'm not. So
is Secretary Blinken running our foreign policy unit almost singularly?
I would say that Biden actually does know foreign policy quite well, and I thought gave a very good press conference yesterday at the NATO summit. There were some mistakes, but generally he had a pretty good command of the issues. On the second part of the point, I think he's very fortunate that he has Tony Blinken, who's a terrific Secretary of State, and Jake Sullivan. Jake and I shared offices when we worked for Hillary Clinton. He was her foreign policy advisor. I was her economic policy advisor. So we worked very closely together, and he's extremely good, and he's got a really good team. I met with the Joint Chiefs of Staff about 3 or 4 months ago to discuss the interaction between geostrategic issues and geoeconomic issues, and they're very aware of the fact that economics plays a key role in our geostrategic strategy, and you need strong economic alliances to undergird political and strategic alliances, and he gets, I'm sure he's getting that kind of advice from
Ambassador Hormats. Thank you so much for joining us today. Robert Hormats is public service to the nation, Vice Chairman Kissinger Associates. This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.